Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday, December 2nd. Hope you guys got some great upcoming plans and staying warm out there upon the holiday season here. I hope you guys have some great, hopefully, holiday parties coming up. Hey, we do got the big day today, the jobs numbers, so we'll jump right into it. We'll start off the non-farm payroll, which is given to us by the Bureau of Labor Statistics. So back in October, we had the last 2 months actually reduced a little bit. The Bureau of Labor Statistics reduced the last 2 months. So the revised version came in at 142,000 new jobs back in October. And the forecast for November was actually 200,000. I did see some people say about 180,000, but it came in at 178,000 jobs. So pretty close to where, slightly below what expectations were. So the thing about this is it's still a strong job number. People are basically saying that the investors don't believe this is going to dissuade the Fed from raising rates in December on the 14th. So they do believe it's almost 100% certainty that the Fed will raise 0.25%. Now the question once they do that is, how often are they going to do this in 2017? When will be the next one? So be prepared that maybe March could be another time when they raise rates again. So especially if we keep getting some decent data here. All that jobs numbers, they basically said 119,000 jobs created were part-time work, and about 9,000 were full-time work. So that's so look at those numbers. And as we usually go into November, remember we usually have seasonal work. So a lot of that's part-time seasonal work for the holiday season here. We'll usually have that for the next 2 months. So we'll probably get a better feel for it once we get to like January and February. Where things are at. Now, we got the unemployment rate number. We've had 4.9 for a little while now, and the forecast is supposed to keep the same, but it did drop down to 4.6. The participation level is pretty much about the same. It just dropped like 1/10% on there, and so not a lot on. And even the U6 number that came in, it dropped a little bit as well. So overall, that's obviously a great number. We'd like to see the unemployment rate reduced. Also, we got the average hourly earnings. We had a 0.4% increase in the month of October. We figured it would still have a slight increase in November, and it actually fell 0.1%. So the good news behind that, even though we'd like to see people earn more money, the good news is that there's been a lot of concern for inflation, which the bonds have been taking a pretty good beating. Now, the reason why this can be good news is that part of inflation is wage increases or cost of wages, and this could help reduce the cost of wages, which also help factor into inflation. So this may calm any inflation concerns as of right now. So right now the stock market's a little mixed out there. We're getting some mixed data out there. Something that could be really big, which would be, that could really shake up the markets come Monday, is we have the Italian constitutional reform referendum on Sunday. Sunday they're going to be voting over in Italy, and basically this is like a revamp of the whole constitutional system. Now, it's almost favoring that this is going to fail, which will lead to the current prime minister maybe leaving office, and then the new guy coming in here, who's I guess a known comedian over there, Beppe, might be taking office over there, and basically, this could be another scenario where we have a Brexit, where Italy may pull out of the EU as well. So this is something that's going to be on a lot of investors' minds. They're going to be watching this pretty heavily come Sunday, making sure, kind of see where things lie. But come Monday, expect some volatility because of the vote on Sunday, depending on how it goes, how it shakes out. So let's go ahead and take a look here at the bond market and see what interest rates are doing. So yesterday, as we saw, we had a huge drop. We were down to 101.97 at one point here, which is below the 102 level. So if we had stayed below that 102.12 level, we have a huge sell-off. We could easily come down, massive sell-off. And if we did break below that, again, you could probably see a big sell-off, which would raise rates. But today we're hovering right here about the 10-day moving average. We're up about 41 basis points currently, which would give us better rates from where we left off yesterday. So we were fortunate to close at the low point yesterday and did rally back a little bit. I think we ended up closing around 22 basis points, down 22 basis points. But Right now we're up 44 basis points, touching onto the next. Looks like we could be pushing the next resistance level here again, trying to challenge that again. So let's keep our fingers crossed so we can get a nice rally there. And if that Italian vote unfolds the way it could be, we could have another Brexit, which could help boost interest rates, help us out a lot come Monday. So again, be prepared. That's just keep your fingers crossed. We don't know exactly, as it's been going into a lot of 10-year treasuries. But again, that could help out mortgage-backed securities come Monday if the vote goes, what way they're kind of planning it to happen. All right. So, anyways, folks, if you guys want get more updates throughout the day, even after reading the video, come on over to check out on Twitter. I'm on Twitter at Mike Bjork, and you can follow me there and then receive updates as I post them throughout the day. Have a wonderful day. Thanks so much for watching. I hope you guys enjoy your weekend. We'll see you guys on Monday. Take care. Bye-bye.